You don't need to be bad with money to stay broke. Sometimes, being broke is what makes everything more expensive. On screen, being broke is expensive. Sounds backwards, right? Good. Let's talk about it. Imagine this. Your phone screen cracks. Repair cost, $250. Your bank balance, $38. So you wait. You squint at the shattered glass. You tell yourself it's not that bad. 2 months later, the touchscreen dies completely. Now it's $600 for a replacement. That's not bad luck. That's a penalty for not having margin. On screen, $250 to $600. Here's the uncomfortable truth. When you don't have cash, small problems don't stay small. And most financial advice completely ignores this. They'll say, just cut streaming services. Cool, that saves you $15. But what about the $35 overdraft fee on a $5 mistake? Exactly. Quick question. If you borrowed $5 and paid back $40 the next day, would you call that normal? Didn't think so. Let's start simple. Groceries. If you've got $60 free, you go to Costco and buy in bulk. Low price per unit, done for months. If you're scraping by, you buy the tiny pack at the corner store. Higher price per unit. You go back next week and the week after. On screen. Bulk, 50 cents per unit. Small pack, $1.50 per unit. You're paying more for having less. That's not laziness, that's being locked out of scale. Fun fact, the less money you have, the higher your personal inflation rate usually is. Yeah, inflation hits different when you can't buy in bulk. Now, let's talk about the system. If you keep $10,000 in your account, banks waive fees. Maybe they even pay you interest. If you keep $50, one automatic charge pushes you negative. Boom, $35 overdraft. On screen, minus $5 balance equals $35 fee. You effectively paid 700% plus interest for a 24-hour mistake. If a payday lender did that, it would sound criminal. When a bank does it, standard policy. The rich earn interest, the broke pay interest. That's not an opinion, that's math. And before someone says, just
how will
track
I
your spending
pay?
perfectly.
No money left.
Have you ever
The
tried making
calendar.
perfect
I
long-term
can't
decisions or
afford
stressed about
this.
rent? Exactly. Let's zoom out. Car financing. Someone with strong credit buys a reliable used car at 5% interest. Someone with bad credit and no savings goes to a high-risk dealership. Higher price, 20% plus interest. Over time, they may pay double for a worse car, and when it breaks down, they're still making payments. On screen, low credit equals high interest equals higher total cost. It's not just the car. It's the risk premium attached to not having money. Same with housing, same with insurance, same with almost everything. You're not just buying the product, you're paying for the absence of liquidity. Here's the part nobody tells you. Poverty also taxes your brain. Financial stress reduces cognitive bandwidth. When your brain is busy surviving, it can't strategize. So yes, short-term decisions win, because survival beats optimization. So what do you actually do? Not crypto, not day trading, not chasing 8% in an index fund. Step 1 is boring and powerful. Build a buffer. On screen. Goal number 1, $1,000 cash buffer. That first $1,000 changes everything. Flat tire? Annoying, not catastrophic. Small leak? Fix it early, not full replacement. Buffer money lowers future costs. It reduces insurance premiums. It prevents overdrafts. It lets you buy quality once instead of junk 5 times. You're not trying to get rich first. You're trying to eliminate penalties. Think of it this way. Before you invest for 8% returns, eliminate the 20% leaks. That's a guaranteed win. Audit your life for what I call leak points. On screen, find the biggest leak. High interest debt, car note, constant replacement purchases, late fees. Pick one major penalty. Attack it aggressively. Side hustle for a weekend. Sell unused stuff. Cut expenses temporarily with a purpose. You're not sacrificing. You're buying freedom from that specific tax. Let's summarize. Being broke is expensive because you can't access bulk pricing. You pay higher interest and fees. You're charged risk premiums. Small problems compound. Stress reduces decision quality. The escape plan? Stop chasing returns, build a cash buffer, eliminate high-interest leaks, think total cost, not monthly payment. Wealth starts when penalties stop. If this shifted how you see money, subscribe, because we're going to keep breaking down the financial mechanics nobody explains clearly. And tell me in the comments, what's one expensive because I was broke moment you've experienced? Let's compare notes.